The European Central Bank is pulling the plug this morning, halting lending to some Greek banks temporarily. The move's certainly not inspiring confidence as worry spreads across the Eurozone. And just in the last few minutes, we've seen a leg lower for European markets. Let's welcome Danny Blanchflower. He's with us this morning. He's a former central banker at the Bank of England, professor at Dartmouth College, and Bloomberg Television contributing editor. Good morning, Danny. First, tell us how significant this move is from the European Central Bank to cut off some of its liquidity to some Greek banks.
Well, this really does sound like this ECB wielding a very big stick. It really doesn't sound the kind of thing you want to do in a real crisis where banks are under pressure, everyone's worried about whether they'll survive, and there's a worry of flight of money out of the banks, out of Greece, and this seems like a really strange thing to do. I always think central banks, the whole point of it is do no harm, and the worry is this actually exacerbates the crisis rather than calms it down. So and obviously the markets have taken fright.
Danny, could a skeptic here say this is the ECB saying, hey, if you leave the euro, no biggie?
Well, I think if they are saying no biggie, they're mistaken. I mean, I've been seeing estimates. People have been thinking about what the cost would be if Greece did leave. The numbers are something like 500 billion to €1 trillion. I mean, that's approaching really big numbers. So this, I think, is very worrying. I think it's very complacent on the part of the ECB to think that they can sort of push them out and there won't be a worry. I mean, just think of all the contagion effects that are going on. So I think this looks a rather worrying move unless there's something going on in the background. Normally, central banks wouldn't do this kind of thing.
Well, your former boss, Mervyn King, over at the Bank of England, has said that he's making contingency plans if Greece were to leave the euro. What's going on behind the scenes inside of the central bank boardrooms?
Well, obviously the worry, and the worry is certainly at the Bank of England, and there was a press conference yesterday as the MPC released its inflation report, and the governor talked about the really big worries, particularly about a flow of funds coming out of Europe, rushing towards the pound. So there's worries there, and certainly it's true when you read the minutes of the FOMC meeting that members of FOMC are worried about downside risks to the world economy and to the US economy. So obviously countries are extremely worried about what's going to happen, thinking about actions that they might take. I mean, the actions that they have obviously have to do with providing liquidity, potentially about doing more QE, but obviously these are issues that may well impact the currency.
Do you think this takes us closer to QE3? Obviously, downside risk, as you noted, globally. Is this another factor that brings us a bit closer?
Well, I think so. I mean, I think if you read the FOMC meetings, I characterize the FOMC as saying waiting, watching, worrying. And obviously developments over the last 2-3 days mean that they're more worried. And if there's a shock from Europe, it appears now increasingly to be happening, then the response will be more easing, more provisions of liquidity, try to buffer the economy from this shock. And I think the same thing at the Bank of England. Listen how different that is, thinking about putting in stimulus, providing liquidity. And we've heard the opposite from the ECB, trying to say we're taking this away. This is kind of the story that we've seen. Bank of England and FOMC acting like central banks, ECB being pushed by the Germans, acting kind of the opposite.
All right, Danny Blanchflower,
and making the crisis worse
at Dartmouth College. It's a QE world, and it doesn't look like it's going away anytime soon.